Hello everyone and welcome to Day Trader S&P 500. Today is July 28th, 2021. This is Dale Woodson, editor of Woodson Wave Report. You can see our disclaimer here and our honor roll and top 10 awards from Timer Digest over the years. Also want to show you guys our subscription services here. We have our annual subscription, our monthly subscription. We have a video on demand, a couple of educational videos on there, and other classic crashes and Bitcoin and GameStop analysis. I want to let you guys know there's a YouTube discount code. Put in YouTube right there, and you'll get 10% off of all of our subscription services for 30 days for free. Also, I'm sorry, that's for the contest. I got ahead of myself. YouTube, you get a 10% discount on all of our subscriptions, any one or any multiple ones you want to choose. And we have a contest, guess the closing price of the S&P. The July contest has ended, and the August contest will end on August 10th. And whoever gets closest to the final price at the end of July, a couple more days, will win all those subscriptions for free for 30 months. 30 days, I'm sorry. Okay, and before we forget, let's remind you and thank you for patronizing the channel. Hit the reminder bell, the subscribe button, and the like button. And if it didn't show up this time, let's see if we can get it here. Bear with me, and it's going to be a no-go, so there is a like button down there, and it looks like this, but not that big. Okay, exciting things going on, a lot to get to. We want to talk about the S&P and Tesla today, okay? I want to show you guys first this Fibonacci time spiral that I started on the March 4th low. All the spirals I did since 1999, I started with the high, mainly with the objective to find the low, which is usually a Fibonacci 55 days from a high. A lot of crashes occur there, and sometimes lows occur there too. This sequence has caught every turning point with 1 minute of total slippage for 144 days, or over 205,000 minutes. Okay, there's the accuracy right there. 99 with about 5 or 6/9% during that time. Okay, and the next turn date in that sequence, I believe, is October 23rd. But that's getting a little bit ahead of ourselves. The reason I show this, and it's like, okay, so each one of these declines had met these highs. This one marked a low. You know, at least 2 or 3 days of declines, okay? And the reason I show that, you can trade that. Day and swing traders can trade that. But if this works out like another one did, I want to show that other one here. This is the one that started off catching all these shorter term moves, but then again, this was turned into a weekly spiral. I went from days to weeks, and this one that I started at the orthodox top in 824 of 99, it caught all of these peaks. All right, not quite every exact single one, but all these peaks going all the way 7 years out. I don't know if the current one will do that, but we'll see how it plays out. So what starts off as a little deal could end up being a big deal. Only time will tell. Okay, so we're going to look at the S&P. We're looking for at least a retracement of the most recent 5-wave rise from the July 19 low to the all-time high on the 26th. You can see we have an A down and a B up, and we're looking for a C down. At a minimum, we're looking at a retracement of this decline, unless or until that wave count is broken. We'll get into that. So our targets for this are 43.51, 43.28, and 43.06. So let's look at the market from that July 26 high. Here it is here. Now we're looking at a 10-minute. This one back here was a 1 hour. Okay, here's a 10-minute, and there's that high. And I can show you guys here that the bearish count, let me get it here, shows this is an A wave down. You can see it right down there in red. This is a B wave up here, and we're looking for C down to gain equality with A at 43.65 If it's something larger and it's a 3, then we're looking at a 1.618 of 43.34. I want to keep both the bullish and bearish counts in play because of the price action here. Okay, and I just want to show you guys real quick where that Fibonacci retracement went from that all-time high down here, and it's right there. So let me put that 786 because I believe that is in play. Here we go. There we go. And you can see the 786 is right here at 44.12, and the B wave high was 44.15. Okay, for this bearish count to move forward, we'd first want to see a move below this low here at 43.87, and then obviously a move below the A wave low at 43.72. Okay, that's the bearish count. I want to wipe. Well, let's go to the bearish count over here. Let's see. We got the spiral. We've got the bull count there, and we've got the bear count there. Okay, there you see the A wave down to the 43.72 low, and then the B wave up. This breaks down into 3 waves, so it's basically 5 down, 3 up, and then 5 down. Okay, we look at that 43.65 target there, and there's where the B wave came very close to a 786 retracement. All right, so there's what we need: confirmation, a move below this low at 43.87, subsequent move below 43.72. Then we got a target of 43.65, and I had the 1618. It may still be up there. Let's see what it is. 43.34. So let's wipe those out. Let's remove that. Let's remove that. And the bullish count, and let's remove, well, we can leave that up there. We'll leave that up there. Shows this as the entire decline from the all-time high to here. Okay, then we start a new bullish wave up with a 1, 2, 3, 4, 5. That's 1. Let's get a retracement here. Okay, and we get a Fibonacci retracement. You can see right there that that wave there was a perfect 618 retracement of 1. So this would be, let me get it in here. This would be on the bullish count. This would be 1. This would be 2. Let me just throw 3, 4, and 5 up here for out of the way. Okay, and I want to remove this because it is a little bit confusing to keep the bearish count up while we're doing the bullish count. Okay, so you can see this would be an A down, a B up, and a C down. I want to show you guys the Fibonacci relationship between C and A. There is A down, there is B up, and there's the 1 to 1, and there's the 1.618 to 1. Okay, so it came in between there, but the main thing is that it hit right on the 618. So in the bullish count, this is 1 and this is 2. What's our targets? Obviously, we want to see a move above this high and ultimately above this high. This high here is the 44. I believe we had it 15, and this here is the 44.22. Okay, so let's get an extension for the bullish count. And this is 1, and this is 2. 3 equals 1 at 44.25, and a 1.618 right under 44.50. So that's the bullish count. Let's get that one out here. Okay, there's the all-time high. There's the retracement complete there. There's a 1 up, an A, B, C. C is a perfect 618 of 1 right here. Okay, 3 equals 1 at 44.26, and a 1.618 at 44.50. You need to see this low hold for the bullish count. You need to see this high broken for the bullish count, and then there's our targets. Obviously, we need a subsequent break of 44.22. Hold support, break, break 44.15, break 44.22. So that's the bullish and the bearish count on the S&P. They are both in play. We have parameters for both the upside and the downside. We'll see what happens over the next couple days. I do want to point out, like I had said before, these these turn dates have all met with at least 2 to 3 days of decline. If this one matches or just has 1 day, it would be different. So we'll see what happens. Also, I want to point out, if this is a new 5 ways up, at the very end of the day, this last bar here, which we could count as a 4, would break the wave 1 high. So this leads a little more credence to the bearish count. We'll see. This thing could be extending itself out. We'll have to see how that works out. But that was very interesting right there at the end of the day to break below that high. We'll see how tomorrow plays out. Okay, let's move on to Tesla. Some exciting new things. Sorry for all the marks. I like to leave these up here. We're looking at a daily chart of Tesla. We're looking at the all-time high there. We've got 5 waves down for A. Now we're looking at the redwood circle. We got an A up, a B down, and a C up for B. So we're looking again for 5 down, 3 up, 5 down. You can see the internal wave count here of a 1 and a 2. And I'll get into that in a little bit, but I want to show you guys, just look at this thing, and I'll tell you what, when I first started trading way back in the 90s, I liked to spot 4s and trade the 5s. And boy, if this doesn't look like a triangle, it looks like a triangle. Let me get that in here for you guys. Okay, a contracting triangle at that. We've got an A down here. We've got a B up here. We've got a C down here. We've got a D up here and an E here. Let me make some adjustments to this. Let's make this a minor degree, and let's put in the let's get them in here in the settings. Let's put in the lines to make it a little, let's make them red and make them a little thicker. Yeah, let's go like that. There we go. We got our starting point way off here. Pardon my artistic moves here. Yeah, that went way off here. Okay, there's, whoops. Let's move that B up here. There's the A up. How did that get so messed up? There's the C down here. Okay, guys, bear with me. It's jumping around. Okay, let's get that up. Maybe we only did an ABC on that, huh? Let's take that out. Let's try again. Let's get an A, B, C, D, E with it in there. There's the top. There's A. There's B. There's C. There they are. There's D and there's E. There's D and there's E. What I wanted to point out was, let me get the lines in there this time, just see if this works. Okay. No. Okay. Anyway, a lot of times the E wave will throw under. Okay, it's a contracting triangle, meaning lower highs and higher lows. Okay, so B is higher than A. You know, D is lower than B, so it's going smaller and smaller, crunching down, then it thrusts to the upside out of the triangle. This would imply that this January high was a 3, and this is a triangle for a 4, and we're going to new highs, okay? So we would need to see a break above this C wave high here of 700 to make that come true. But I want to get in here. Let's, we got this in here twice. Let me remove that. Let me remove that again. Okay, and remove that. I want to get into a smaller time frame here because the other counts are still alive too. Okay, so let's look at an hourly chart here on Tesla, and you can see here that we've got the 1, 2, 3, 4, 5 to the downside and an A, B, C. So this would be 1 up. This is looking at from the July 13th high. We've got a 1 down and a 2 up, and we have what looks like a 1, 2, 3, 4 forming here. Okay, so 3 would gain equality with 1 down here at 596. All right, we've got 4 and 5 sitting there. We got to see this thing develop. But this count, this bearish count is still in play. Okay, we have our parameters again. We just met one of them for the bearish count was breaking this low here. The next one is breaking the wave 1 low at 621. 621 is broken. Then we're going to look at 3 down, 4 up, and 5 down. And the 1.618 extension for 3 is 551. Okay, but that triangle, it sure looks like a triangle, and that's in play, and we have the parameters for that. Okay, we need to break above the 693 and subsequently to 700 for the fourth wave triangle to play out. So we have our parameters both to the up and the downside, both for the bearish case and the bullish case, which is labeled as a fourth wave triangle and a fifth wave high. The market will tell us, all right? It hasn't told us yet, but it will. I don't think I have a picture of that, but I want to show you guys. That's an old one there. Okay, the bull count there, as you see, the bear count there, and the Fibonacci time spiral. I've never had one this accurate with 1 minute of slippage, if you will, over the course of 144 days. That's just an astronomical percentage. We'll see if this marks more than just a one-day decline. Okay, that's it for today. Until next time, take care, everyone.